Hello, you are now tuned in to the Millionaire Millennial. I am your host, Stack Banks. And just to give you guys a quick breakdown. So the Millionaire Millennial is focused on providing a younger generation, typically millennials, but really anyone, a little bit of insight into differing topics as far as finances go. So investing, including, crypto or real estate, stock market, precious metals, all those sort of things we're going to try and touch on. And then we're also going to try and touch on entrepreneurship across the board. But right now, for those of you who are just tuning in, we have been focusing on cryptocurrency and Web3 and that world, and helping you guys understand what it is that you're looking for as far as investing goes, what's a smart buy, what's not, and also providing you guys some tools and starting points to do your own research to get fully financially educated, if you will. So with that being said, this podcast is not financial advice. It's not investment advice. And it's meant really as a starting point for your own education. But we do try to sort of work on and kind of bang on the fundamentals that I believe lead to financial stability. So for those of you who don't know, my basic principles, right, are to, number one, I believe you should work in some way, whether it's for yourself, whether for a company. I don't care if you're working at Burger King or you're working at a Fortune 500 company. I believe you should have some form of cash flow coming in, right? If you're someone that you've made it to the point where your investments are working for you, then great. You've already got half the puzzle solved. But this episode in particular, and this podcast in general, is not necessarily meant for those people. It's for those who are just starting out. Excuse me. Those who are just starting out, those who are looking to take control of their finances. Maybe you have debt, or you're looking to purchase a home, or you've got an inheritance, or you've been working a long time and now you've got some money saved up and you're trying to figure out what to do with that money. I am not trying to sell you a course. Okay. I don't have any mentorship programs, things like that I'm trying to sell you. This is purely for educational purposes. And also it's an exercise for myself to make sure that I am on top of my finances, in the sense that I am practicing what I preach, and that I am essentially hammering out the fundamentals over and over, not only for myself, but for you guys. And through the repetition of this information, not only will I refresh a lot of it in my own mind, but it allows me to keep you guys educated, and hopefully I can see you guys on the other end when you're able to, depending on your path, if you so decide to choose, end up as entrepreneurs or business owners, founders, investors, what have you. So let's get right into it. This series has recently touched on crypto, and because we are touching on crypto, I thought it would be a good idea to talk about trading in general, whether it be with cryptocurrencies, NFTs, whatever, what have you, or through more traditional financial means, stocks, bonds, ETFs, things like that. And like I said, you guys need to do your own research. I am not a financial advisor. This is not meant to be financial advice. Okay. So you guys, anything that you learn here or in any podcast, please, you guys look into books that you can find at your local library, or materials online. Online's great, but there's a lot of white noise out there, and people repeating information and misinterpreting the information that they believe they've come to understand. So I always encourage you guys, please pick up books on the specific subjects that I talk about. So today what we're going to talk about is what's known as advanced trading, right? So some of you might already be invested in the crypto world, NFT world, whatever, Web3 space. Some of you might be invested in stocks, bonds, ETFs, those sort of things that come from traditional institutional investors. This information hopefully should be useful to all of you guys. Okay. So what we're going to try and do is cover a few general terms and buzzwords that you hear in these trading spaces in the crypto world and in traditional finance with day traders and things like that. And we're going to go over a few different trading strategies that people utilize. Now, I'm not advocating that any one is better than the other. We'll talk about what's called technical analysis, and then we'll talk about what's called fundamental analysis. These are two different types of analysis that traders use in order to figure out if they are going to buy or sell an asset and at what price they are expecting to buy or sell it at, and potentially what those prices will do in the future. With that being said, no strategy has proven to be completely faultless. And there is no one strategy that allows anyone to predict any markets. These are just known strategies that a large amount of people use. So you have technical analysis, you have fundamental analysis, you also have people, and I find myself very much in this category, though I do swap between the two and utilize all three of them. But I typically am a dollar cost average buyer of any asset, meaning take Bitcoin for example. I buy in at, I'm throwing out numbers here, but let's just say $40,000, and I believe it's on its way up to 60. But along the way from 40 to 60, I want to continue to accumulate Bitcoin, right? Now, Bitcoin or any other asset stock typically has what's known as volatility, meaning that the price goes up and down on a minute to minute, moment to moment, day to day, hour, yearly basis, right? So on any given day or hour, minute, if let's just say, and I'm, like I said, I'm throwing out hypothetical numbers. These are not the real numbers for Bitcoin at the moment, but I'm just giving you nice big even numbers to make the math easy. So say Bitcoin is at $40,000 per Bitcoin, and I've bought one Bitcoin. Okay. And I believe Bitcoin is on its way up to $100,000, $1 million Bitcoin, whatever the case may be. And I want to buy more of it. I personally when I dollar cost average buy any particular stock or asset, Bitcoin in this case, what I will do is watch the market and try and consolidate or add as much Bitcoin to my portfolio for as cheaply as possible. So if Bitcoin's trading for $40,000 in the moment that I'm trading or looking to trade, and who knows, by the end of the day, it might be $60,000. But along the way, the price can go up and down, and it might go above 40,000. It might go to 60. It might go down to 13,000, 15,000, whatever. So what I do as an investor is I look for a price that I'm comfortable buying Bitcoin at. Not that I believe that that's necessarily the value of Bitcoin, but what I'm willing to spend to acquire whatever X amount of Bitcoin or fractional bits of a Bitcoin. So let's just say I have the money for a whole Bitcoin, or for this example, say I can buy as many Bitcoin as I would like. I'm a millionaire, billionaire, whatever. I'm in at Bitcoin at $40,000. I believe Bitcoin's going to go up to $60,000 by the end of the day, the end of the week. It's going to go up and down for many hours until, first let me say this, crypto markets do not close down. They're 24-hour markets, unlike traditional stock markets. Those are typically operating like a 9 to 5 schedule or whatever. There's open market hours, and then there's hours that you can technically trade in, but those orders won't be fulfilled until market opening the next day. But let's just use Bitcoin as an example because it makes this scenario easier to process for you guys as the listener. So Bitcoin's at 40,000. I believe it's going to go up to 60,000. Market volatility is making the price go up and down throughout the day. What I will do is look at what is the average cost of the coin, right? So if I want to acquire a whole new Bitcoin, right, I'm going to look at what is the average cost along the way of me acquiring this coin. So if I'm going to deploy 50% of the funds that it would take to acquire a Bitcoin in a day, so if it's at 40,000 and I have that plus much more, but I'm going to put at least $20,000 into it, I want to make sure that $20,000 is getting me as much Bitcoin as possible so that I'm buying at the lowest price for the day possible. So when I dollar cost average buy something, I look at the points throughout the day or week or month or years as time goes on where the price of Bitcoin dips or balloons up to the point that, or the price that I want to buy it at. And I try to make all my purchases of Bitcoin around that price. Now, you're not guaranteed that the price of Bitcoin is always going to be the price that you want it to be, because some days it sells for much more than probably what you would want it to sell for, and other days it sells for a lot less, sells and buys, right? So that is a personal choice of where you're going to get into or not get into Bitcoin or the crypto game. And this functions for any crypto or any stock out there. But it's something that if you're looking to acquire an asset through essentially the cheapest and most risk-free possible way, that is one of the ways that you'd go about doing it, through the dollar cost average buying. So before we get even too far into any of that, because that might be something that's covered in a later date, that's just my own for those of you who are wondering, that's how I personally like to do it. But I do use technical analysis and fundamental analysis, but it is not the final decision maker. But what we're going to do is sort of switch gears right now and actually look at some of the terms that I've been using and we will continue to use in this series. So part one, we'll call this our advanced trading guide. Part one, what we're going to do is talk about what's known as an order book. And these are some of the fundamental terms you guys need to understand when it comes to trading stocks, cryptos, things like that. So I'll give you the technical definition of what an order book is. So an order book essentially is a list of buy orders, B-U-Y, orders known as bids, and sell orders known as asks for a specific asset, say Bitcoin, a GameStop stock, whatever. Order books show not only the price buyers and sellers are willing to pay, but also how many discrete units, as in tokens, or the actual the stock itself, the discrete tokens they seek to buy or sell at each price. So I will try to use exchanges and things that are familiar to a North American or United States audience, because that's where I myself am located. I cannot speak to every exchange out there, just the ones in the US market. But specifically, I personally use Coinbase, Robinhood, a couple other apps when I'm buying and selling stocks and cryptos and things like that. And typically, when I'm speaking out these exchanges, I'll say Coinbase, but I mean them, all the exchanges across the board: Coinbase, Binance. Binance is not available here in the United States, but for those of you who use other platforms, this information should be useful to you guys. So for every cryptocurrency available on Coinbase and every other financial instrument available, say on the NASDAQ, there's what's called an order book. Okay. Because Coinbase is a big exchange with a lot of customers. There can be millions of people looking to buy or sell at any given time. So looking at the order books for the cryptocurrencies you're interested in is one of the best ways to get a sense of the real-time fluctuations in supply and demand. An order book essentially is a list of current buy orders, also known as bids, and sell orders. Like we said, they're also known as asks for a specific asset. A generation ago now, before crypto existed, order books were actual physical books maintained by exchanges. Today, order books are electronic, accessible on computer screens anywhere in the world, and are dynamic, meaning they're constantly updating. Now, these order books show not only the price buyers and sellers are willing to pay, but also how many discrete units, as in shares or tokens, they seek to buy or sell at each price. Exchanges don't actually possess the asset that are being traded. Instead, they function as a matchmaking service, pairing interested buyers and sellers together. Okay, so most order books are divided into halves on a screen. In the advanced trading sections, typically on Coinbase and Robinhood and a couple other apps, the order book is separated vertically with the asks and bids scrolling towards the middle. On Coinbase, I believe it's separated vertically with the asks in red on top and the bids in green on bottom. And what you'll run into is a couple different things on these charts. And when I actually go to put up a video on YouTube later on in this series, we will get more into things like what's called the spread, what the price chart is, and the depth chart, and the visual representations of those things, and how to read those things. But for now, I just wanted to give you guys just kind of a quick overview of that. And we'll look into what is fundamental analysis and what is technical analysis. So you guys are educated on these terms when we talk about them and when you encounter them out in the real world. So here's your actual definition. So technical analysis looks at patterns in market data to identify trends and predict how markets might move in the future. Fundamental analysis is a big picture approach that examines financials, user community, and future real world utility. Now, there's lots of methods you can use to research an asset you're interested in trading, but the two major strategies investors typically use are called technical analysis and fundamental analysis. So technical analysis focuses on an asset's historical market performance. By examining price over time and trading volume over time, you can get a sense of how the market sees the asset. Is it rising or falling? Are people putting money in or taking it out? Is it traded widely and in large quantities? Those are the kinds of questions that technical analysis asks. Fundamental analysis, on the other hand, involves looking at an asset's fundamentals, quote unquote. It's more of like a big picture approach. It incorporates information like cryptocurrencies, financials, the user community, and potential real world applications. Both are valuable ways of understanding an investment and can be applied to everything from stocks and bonds to, of course, cryptocurrency. And they can both help you build a trading strategy and identify what you want to buy, identify when you want to buy or sell a particular asset. So how does fundamental analysis work? With fundamental analysis, you can decide if an asset is overpriced or underpriced based on how you see its intrinsic value. As in, will it be more useful in the future? Take for instance, Ethereum. Most decentralized finance DeFi applications run on its blockchain. If you assume DeFi will grow, you might guess that Ethereum's value will increase in the future. Okay. How does technical analysis work? So technical analysis is more of a numbers-driven approach to decision making. It assumes that the market has already done the work of incorporating all the known information via the current price, which you can usually find on Coinbase or Robinhood or wherever whatever exchange you're using, and amount of the trading activity. So you'd look to like crypto sites, data sites like Nomics and CoinGecko, because current prices reflect market forces like supply and demand. Practitioners of technical analysis believe that the price of an asset should give you a snapshot of how the public feels about it right now. This is known as market sentiment, and it's an indicator traders use to predict trends and make investment decisions. Now, you're probably wondering, why is this important? So unless you have access to high-level models and tools that pro traders use, using both strategies together can provide a fuller view of your trades, while fundamental analysis looks at the more objective indicators of an asset's potential long-term value, things like network activity, use case, business model, their roadmap. Technical analysis focuses specifically on an asset's market performance. So professional traders, on the other hand, might rely much more on one or the other. Large, mature markets tend to have a lot of traders of both types. A trader might, for instance, perform technical analysis using computer models that deeply examine changes in price and volume, including regressions, the relative strength index, and stock market data. If a given asset tends to go through fairly regular boom and bust cycles, technical analysis can give investors insight into the rhythm of these cycles, helping them see opportunities to capitalize on these short-term cycles. So keep in mind that executing successful short-term investor strategies is notoriously difficult. History doesn't repeat itself, so studying price patterns won't necessarily help you make strong predictions, especially in volatile markets. You should only invest what you can afford A financial advisor can help you develop a strategy and understand the risks associated with investing in these cryptocurrencies. Like I said, this is not something that you should just listen to me or some guy out there on the internet and then take, your savings and ape it into a project and hope that, it's going to 10x or 100x. You guys need to do a little bit of research and make sure that you are investing in projects that are going to be here for the long term, that you believe in and that you understand and that you believe are abiding by the market fundamentals and are not a scam or, some rug pull waiting to happen. But for now, that will be our episode of The Millionaire Millennial, the world's most powerful financial podcast. Like I said, I'm your host, Zach Banks. We're on YouTube now, Apple Podcasts, Google Cast, Spotify, Pandora, anywhere you can think of. And we're just going to be pushing more and more content out there. We're on Instagram as well. Look out for us on TikTok. And please follow us on our Instagram. Everything should be The Millionaire Millennial Podcast, I believe, on Instagram. Or wherever you found this podcast at, there should be links back to us. So please tune in, stay educated, make smart investments, save your money, guys, and look out for the next episode coming later this week. Thanks.